everybody, Brian here from quantlabs.net. Today I'm going to show you example usage of the forex signaling and how to make use of the files that are contained in the package. So when you come into your analytics dashboard right here, you will be able to find an option here called forex analysis, tables and charts, and be able to take a gander at the packages. There is a set of tables that are included in the service, but what we are after is this section right here, the analysis reports. So you can fill in your information, your email, download it into your inbox. What will happen is you will then be able to get an attached zip file that will access your service. So here, this is what it will contain, all of these files. So it will be called report_data fx. So in the email, it will just give you the name of the report, the time that it was generated, as well as potential link, an attached file. But these are the files you get to play with. A couple things that I always look for out of this is, first, here are the reports in a Word document format. So we'll look at those in a minute, but what I usually like to look for are a couple things. Is the most profitable. Let's see if we have that in here. We don't. So it's it doesn't have as much information as the crypto stuff, which is okay. So let's take a look at our different types of file formats. So in here we have PNG, we have some Microsoft, as I said, Word documents. We also have some Excel spreadsheets. So these ones can be used. So I'm currently using LibreOffice, which you'll be able to load in the Office documents. Let's see if I wanted to show. Okay, so let's just see if this loads up first. This hopefully will contain the email format since my Mac has crashed again. All right, so while we wait here, okay, so here's our spreadsheet that I wanted to show. This is for Forex. So in here we have, again, all the data that I'm about to show you is from Oanda. These are the fixed number of pairs. So we have roughly 65 pairs to choose from. A couple of things we should be doing is sorting everything based upon a couple of ways to look at this file, this ranking file. First, we can look at the volume. So we can do a sort on volume, column I, as you can see here. Oops, column I descending. And this will give you virtually which ones are has the most volume at this time. So it's 249 right now. Looks like the European Swedish kroner, it has the highest volume. So that's number one. Number two, let me just see. We could probably figure out why that is. If I go to Yahoo Finance, let me just pull that up. Finance, Yahoo. Let's see what's going on in the markets right now. So basically, we have our volume at the highest. The next one's the European Euro, Norwegian kroner. I have a funny feeling what's going on. The markets are doing quite well, but usually that is a defense play for these two to be having the highest volume as a defense play. Okay, so if that's if the markets, the North American current markets, were doing very badly, or maybe just the euro or the euro region might be doing badly in the market, so there might be some defense plays by going into some of the Scandinavian currencies, which is typical what I see. So another way to analyze things is to look for momentum, slope, or any of these momentums as well. But let's sort by slope, column 9. So here what we're looking for, so we're looking at column N, descending again right here. Okay, so what this will tell you right now is what are which currency pairs have the steepest slope. So in this case, the slope will measure that. So here we have the euro, Hungarian, US dollar, Indian rupee, the European Turkish lira seem to be some of the more profitable ones, but we can also determine that by looking at momentum as well. So momentum's column J, so we can look at that as well. Let me just see what we have here. So here we have, again, another way of saying the Turkish Japanese yen, the rand against the yen, the euro against the Turkish lira. So that means that these have the strongest momentum. Hold on here, I thought I'm sorting by J. Let me do that again. So J, I sorted by K. Okay, so this is what we were looking for. So US Canadian number 1, euro, Turkish lira, US Chinese yuan, the top 3 by momentum. Right here, Australian Hong Kong dollar, euro, Swedish kroner, euro against the Danish kroner as well. So those are by order. And the next thing you could also look for is maybe sort by signals in real time. These files get updated every hour. So I could sort by, let's say, a buy signal, which again would be column F here. So here we can tell we only have one current buy signal, British pound against the Australian dollar. Oh, I'm sorry. We want a buy signal, so there's no buy signal. We can also look for sell signals as well. So we have a sell signal for the British pound against the Australian dollar as a sell signal. But always take note on the volume as well, because that obviously will affect your potential fill. The other thing we can do sorts on or filters on is by the harmonic patterns. I'll show you that in a minute. So that's column L. That can be very effective. So here are your currencies with current bullish bats. These bats right here, a good chunk of them. And then we can have bearish bats as well, but you have to use these combined with other combinations, which I'll go over in a bit. So many things you can do with this file, this FX rank XLS file. So the next thing what we can look at are the reports. So in here, in the reports, we have here some PNG files, graph files. We can also look at this one specifically by volume. So let me first pull off the hourly profit. Again, this is according to Oanda data. So these are the movers currently in, so we have the rand against the yen up 2.02%, the Turkish lira against the Japanese yen 1.86, New Zealand against the Japanese yen 1.23. And as always, you have to factor in volatility as something to be very aware of. You can find those out typically in the documents here that I've provided, and there's 4 sets. So in here we have CFD or FX filtered on volume, FX long based on trend, and then just a typical long one and some shorting opportunities. So this one, the short being at 37K is probably empty, so nothing's been generated for it. But I can easily look at some of these other ones. One of the things I want you to be very cognizant of is the use of this service combined with something like TradingView as well to help you out. So typically what I would recommend to do is these are the recommended longs. So here, these are some of the recommended ones. So we are doing, let me see here, we want FX. So we want this one and FX long. We will do a separate video for CFDs. So these are the longs. So again, there's no long opportunity in here because there's just no data generated. Again, by that 37K means it's not generated. We do have some FX shorts here, so let's check those out. And we'll go into these documents now. Okay, so this is the time it was generated at, February 5th, 11:41. As I said, these get generated every hour, so we only have one opportunity as what was recommended in the ranking file. This is the actual in-depth what you can look at. And these are just examples of what you can take away from this. So a couple things we can learn is here's the volume, here's the standard deviation. There's different ways to interpret this in another file I'll show you. This is kind of important for valuation, I'm finding. You can clearly see that this pair, British pounds and the Australian dollar, the Aussie, is in a somewhat range-bound trading cycle. It's actually in a downward trend. It is above trend, which is It is somewhat in that golden zone, but this does not really excite me as a trade. But it is just bubbling into or moving into this golden zone here between the purple and the green levels. So, but you can see historically it has touched them before. Also, you can see there's more negative daily returns versus positive returns, which is not a good thing. Interesting enough that there is a bullish harmonic pattern found. Here's a chart for it. The other thing that you can pay attention to is hopefully I'll be able to show you those are the candlesticks as well, the candle patterns that get alerted as well. Those can be useful. This is an okay signal. I would not be using that convincingly because this is supposed to be a short, but yet we're getting a bullish signal. So I wouldn't get too excited by this, but this chart can sort of explain it all. We have our 6-month view, our 30-day view. This is the number of days on the look back. Usually I like to look at the 30-day. And you can clearly what's going on here. It's just clearly volatile if you were to trade this on a daily basis. We are in a daily down move for the last 1, 2, 3, 4, 5, 6, maybe even 7, 8 days. So not a good thing to use. It is a shorting opportunity potentially, but even if it did, it wouldn't move that much anyways. So here's some of the longs. So we are going to look at the ones based upon trend. We also have the FX long based on long, so let's check that out. This report can be very useful. I did mention that there's some group signals here, so there's some pairs here that we got 1, 2, 3, 4, 5, 6, 7, 8 pairs that are being somewhat recommended. A couple things I want you to take away here, which I was trying to allude in the last document, was we have the group pair. So we have standard deviation, okay? So let me just see here. I'm just going to confirm something. Okay. So what I want to show you is this is in order of recommended signals. So the first one here is the U.S. Indian rupee. So historically, these signals are your typical buy and your moving average crosses. You can see here the green arrow being buy, sell, classic simple stuff. The volume is very low here. Standard deviations, your comparative volatility. So in here, a couple things. You can see here when the signals come on, the opportunities are, this one here to here is a move if you had leverage. But the good thing is here you have standard trend. It is over trend. which is good. It has broken out, which is good as well because the Fibonacci levels have broken out. This is a hard one to determine if there's more positive reviews or returns or negative returns. You can easily compare that in the spreadsheet because I do report that. Here in this time we have a bearish harmonic pattern. There's a signal. We have an automated head and shoulders. Typically what can be used is this is like a head and shoulders pattern, but we are below the trend. Now, one way you can interpret this is if the price does come back and breaks this neckline here, that can be considered an entry. Another thing that is useful, as I said before, are the candle patterns. When you get, let's say, a bullish harmonic and a series of bullish candle patterns, hopefully I'll show you some examples of that, I would consider those pretty good. It's like basically it's screaming at you that this is a potential buying opportunity, okay? And you can see that it did break, the price did break. It is getting overvalued, but the trend looks like it's somewhat strong on US against the rupee. So here you can always tell through the classic historical RSI. Here you can see at that period the RSI did show up where it was over 70, but it still continued to move up, and it's very hard to determine that. But here you can see there's a buying opportunity, so it did have a nice run up, and you can always confirm these with the momentum as well. Momentum's kind of important to me, combined with the RSI. It seems to work nice. As I said, I go over to the 30-day view. So here we can see it is trending up. You can always use the moving averages. And here in the averages, I give the simple moving average of 20, simple moving average of 50, and the slower moving EMA exponential moving average 200. So you can use those to your advantages. I've also thrown in the Bollingers and the volume as well. So from this point on, obviously it looks good. But again, the momentum's somewhat still positive, which is good, but we do have a negative volume here. But you do definitely want to pay attention to those candles combined with harmonics, because those two are very, very reliable as signals for entry. So we are now moving to, looks like the US Japanese yen as another potential. So let's check out that. So here we have a buy signal. This is the US Japanese yen. See here, here's the problem. It's slightly pointing down. Sometimes if you look at these on a very regular basis, over a month, the trend can move more positive if that's what you're looking for. It is above trend, which is good as well. But here's the problem. When you look at comparatively of the Fibonacci lines, let me just pull up the Rand, the US against the rupee. Here it opens up trading opportunities right here. So you can see it's opened up quite a bit. But when you go into the Japanese yen, a lot of these brokers want you to throw on the leverage on the six majors, which the US dollar and the yen is one of the six majors. You can see how tight it is. So they want you to throw on that leverage and hope you lose, and they can profit off of that. But here, why would you trade that? Because there's no trading opportunity here, because there's virtually no Fibonacci lines and levels showing up, which means to me it's in a trading range. Stay away. Here, this one's not so bad, because even if you were to trade it, doesn't mean what I just said is correct, because you can clearly see we have more positive daily moves, but they're tiny. Unless you're willing to use leverage, it's something you can kind of do, but I'm doing way, way, way better, 10 times better, I'd even say, in the world of crypto with no leverage. So this is why I don't trade forex, but I do provide the service to enable you to see these for your own purposes because there's so much of a demand for it. Anyways, going back, we have here now a bearish signal. So here's the signal. Maybe that might mean this price may come off on a daily basis. So again, we have a similar situation with the head and shoulders. This crosses that neckline, something I would be considering. So here's where it gets confusing. We have a bullish and a bearish candle pattern. They conflict. It has come down. Here was a buying opportunity. It did move up a little bit. The momentum's not moving up at all. But again, it's just bouncing around there on the 0 and the 50 on the RSI. But did have some nice moves if you were to add in that leverage. So I can't say if it'll break out, but who's to say, right? So we're now moving into the next pair. So I'm just going to do one last one. Here you can see the volume is quite low. Again, the Singapore dollar against the yen. Again, look at these. I would say this is definitely another one of those range-bound opportunities. This is going nowhere. It is slightly trending down. Again, it's a little better than the previous analysis, but it's still way too tight compared to the US dollar and the rand. I don't like this at all. Yeah, you get this negative daily returns. But here, this is interesting. Bullish harmonic. Okay, that may reverse. We don't know. But again, we have now also a bearish harmonic. We're still generating those lookbacks. Downward trend. Will this move up? I don't know. Unless you're, again, using leverage. Okay, so it is above 50. That's a good sign that it may drive the price up. We have some candles kind of trending up. But again, positive momentum, that's a good thing. I don't know. Here's another pair. We could look at the British pound and Japanese yen. I'm not going to bother because I've shown you enough stuff that should help you out there with that report. But we'll look at another report as well. So now we're going to look at a similar one, but for volume. The longs on the vol based on pawn volume. Volume and trend, I think, are important factors when it comes to these things. But again, these are your. I'll load these up in a minute. But here, let me just pull this up. So this is based upon volume. This report. So here's all the ones, but I do filter out only those that have volume of this greater than this parameter here of 225K. So there is based upon volume. So in here we are looking at, we have our group mean, we have our group volatility as well, which is another way of saying standard deviation. Some people like to play in pairs that have less less volume, or sorry, less volatility. So this might be a good pair because you can see here that the standard deviation is less than the volume or than the group. The other thing is the volume's pretty decent. This is the average mean of the group here. So the volume is okay for USD and the HUF Hungarian. So it is in the zone that we like to see. But again, look at this. These are crazy buy-sell signals. A lot of them are probably false positive, trending down. But here, this is not too bad. Historically, the Fibonacci levels are opened up. But here we are in that range. So there may be some potential here. Let's do some further analysis. Historically, I would say there's more negative daily returns. Here's an interesting couple of factors. So here we have a bullish harmonic. Boom. Head and shoulders. Let's see what that looks like. Again, this could be a potential entry right there. All right. So now this is where it gets very confusing because we have two bearish candles. But here it's interesting because we have some decent volume over the last few days. Once, let's say if that momentum goes into positive territory tomorrow, something I would definitely consider because we have 4 days of positive. So this may be a decent little trade for tomorrow because it is building. And here we have a big move here and a big move here. So this may actually move up like this, but then you would expect negative red bars to follow the following day. So here we are now dealing with the euro check. Volume is okay. It is in our golden range. And I do believe that this was 0.001. Let's see what we got here. What's the group? I always like to compare the group. So you got 0.006. Let's go back here. Is it below? Is it less volatile than the group? Yes, I would say it is less than by a long shot. So it's very less volatile. Here, some activity, but this is just something you definitely want to stay away from. Downward trend, but who knows? This may open up a little bit. Again, lots of negative daily returns. We have a bullish harmonic. Again, same thing on the head and shoulders is going to break through that price. This is something to be cognizant of. Candle pattern, we have one bullish. This is a little risky. We've got a 30-day. So here we have a positive move. It is positive momentum. That may be something to look at. Okay, so these are the interesting trades with the, as I said earlier, with the Scandinavian currencies. Let's say that the markets tank. This could probably move up as a defensive play if the U.S. or Asian or something spooks a market. Some of the traders may move into Norwegian or Swedish, which we saw with the higher volume. They may be seeing something that we, the professionals, don't see. The standard deviation may be somewhat in line with the group. The volume's a little higher than normal, than the previous two. As you can see here, it is driven up, but just depending upon what happens in the market, the trend is okay. We have some nice Fibonacci level activity here. So let's say if the price does drop to here and the markets go bad, the indices that is, this may be a good play. Now the other thing you need to always factor in is that the Norwegian krone, Norway is a commodity oil play as well, so that can be driven also by oil price. So we will talk about that in the CFD as well. So do remember that. I would say there's slightly more negative versus positive. Again, you can confirm that in the spreadsheet. So let me just see if I can pull that up again. Let's see what we have open. Let me pull that up again and I'll show you that. That is so critical. This one right here, the FX rank. So in here, what I have put in, I should show you this, which will be very, very helpful. And then there's a column for statistical momentum, standard deviation. That's for, this one right here is for volatility, as I've been talking about. But what I'm talking about are the daily and negative returns. Where do we have them, if we have them at all? Doesn't look like I've put them in here. No, I haven't put it in here. But I can always put it in if people are asking for it. That can be a very useful, because I do know I put that in to the crypto spreadsheet. Yeah, but you can visually see it, as I said, in the statistical return report here. We were looking at, was a trend. No, you want the other one, volume. So yeah, you can easily see that in this diagram here. So again, we have a bullish harmonic, but again we have a bearish, so it conflicts. Head and shoulder, we have no candles, it looks like. We got two candles here, bearish and bullish, again mixed. But one thing you can look at is the momentum. It may be building, but you want to see better candles that just scream the opportunity at you. See here, that's good on the 30-day outlook, and it is somewhat positive. Now, maybe I should include this analysis as well, the euro and the rand. Let me just repeat, there's two very volatile trades out there. There's the rand, the South African rand, ZAR, and the Turkish lira, TRY. So when you look at, this can be heavily traded, but it's very unpredictable. Let me just get to it and help. This can be one of those unpredictable trades, but once you get to know it, see here it has a very high set of volume, but if you remember, the group standard deviation was 0.0006, so this is more volatile. The standard deviation is higher than the group volatility, but it is within the trade range. So let's talk about this. You can clearly see all these signals. Some of these can be false positive, but this one here, this one definitely is not. Okay, the trend is slightly up, tight Fibonacci's. This is kind of in a range, trading range, but here again, the positive versus daily returns, positive versus negative daily returns, I'd say it's split. But again, you're going to be relying on these harmonic patterns. So we have here our harmonic pattern, okay? And then again, we have the bearish, conflicting. The euro, the automated head and shoulders. We have a bullish candle, but I have seen instances where you can get 4 candles that are all bullish, and that's a pretty good sign of something is brewing. Here, it's just negative momentum, so if you want me to say, is it bottoming? Probably not. This on a 30-day level is buying opportunity, but there has been a little bit of positive momentum here, as you can see, because of the values. So people did pile in, brought up the momentum, got out, and back to its bad day again. So these are the sort of things, these sort of moves you're looking for if you're going to trade these kind of currencies. But again, so I talked about the ZAR, the rand. CHF was one of those I just never had luck with. The Swiss franc. So be aware of that as well. But can be the Japanese yen and the Swiss franc can be safe haven currencies in the base quote. But sometimes I've also seen it where the Scandinavian ones are that as well. So let me show you some other things that you may find useful. So these charts here in the world of crypto are the spread costs. Okay, so let me show you those, and this is very unique to this set of data. So let me just show you. So we have New Zealand, Turkish. Let me just show you. So the first one we'll look at is the New Zealand Swiss franc. So in this will show you the spread cost using Oanda. So you have a bid and ask. So you can see here that this spread here, where the broker makes money, people will trade it, and it's very lagging. It's not very tight. You want to see these spreads not to exist. These discrepancies here. the difference between the bid and ask. So be aware that these do exist, and that means slippage for you when you put on the trade using these currencies. So let me see if we have any. The only times that this looks like it was useful was during right here where it was in line. There was no spread at all. But right here are the spread costs you just want to stay clear of if you can. So a lot of people will not trade these because they have to, when they put on a trade with these currencies, they have to factor in this cost of the difference between the bid and ask first, commission next, and then hope they get a profit, which means you can lose. And this is something to be very, very cognizant of when it comes to trading these more volatile, less traded, I shouldn't say less traded, but just more unpredictable currencies like the lira, the Turkish lira, and the South African rand. But they are extremely volatile. So here it's pretty crazy. The rand against the yen, that's crazy. So again, another reason why I don't trade forex, but it's here for your purposes if you like. Hopefully you got some use out of it. If there's anything else that you would like to see, let me know, and I'll definitely consider it. But if there is no demand for something, I don't see any point in implementing it. Other than that, we shall talk to you later. Hopefully you got some use out of this, what's available in this. Once again, let me just see if, let me see here. No. Okay, so that's pretty well it. Hopefully you got some usage and learned some stuff out of it, the package. And just to remind you, these packages, as a courtesy, can be sent out every 6 hours over 7 days a week. So let's say for Friday, the remainder until Sunday night will be the same. So just be aware of that. And we shall talk to you later, and have a good day. Later.